Have you ever heard of prop trading and wondered what it's all about? How do companies like FTMO, FundedNext, and E8 alter the traditional career path of a trader by offering them the chance to manage funds up to even $600,000? Today, we'll start from scratch and answer the basic question, what is prop trading? Understanding this concept is key for anyone wishing to delve into the world of prop trading. Prop trading is short for proprietary trading. It involves a prop trading firm providing its own funds for a trader to trade with. If profits are made, the profits are split between the prop trading firm and the trader. However, to get the opportunity to trade on such an account with a profit split, which is known as a funded account, a trader must prove their skills during a trading challenge, which is made available for a fee. Most firms return the fee paid for access to the challenge after successful trader verification. Okay, so we have a challenge and we get a funded account. But what does a trader gain by trading in such a prop trading firm? The biggest advantage is access to larger investment funds. The financial resources of a prop trading firm far exceed what most individual traders could invest themselves. Larger funds mean a greater profit potential. Assuming the same percentage of earnings, larger funds translate into significantly larger absolute profits. Thanks to this system, the prop trading firm identifies traders who have skills and provides them with capital to trade. It provides a real possibility of making a living from trading. Another important benefit is that the investment risk is reduced. The trader only risks his own contribution to the challenge. However, it should be remembered that after obtaining a funded account, the fee is most often returned. This makes the risk ratio in the overall settlement much more favorable than trading on your own at a CFD broker. Well, we talked about the biggest advantages, but what are the disadvantages of this system? The trader primarily risks his initial contribution needed to enter into an agreement with a prop trading firm. If he does not meet the requirements, such as making a certain profit or too big a loss, unfortunately, he will lose the funds paid in. Therefore, the potential risk depends on the purchase amount of a given challenge. It should be remembered that the funds needed to buy the challenge typically range from $100 to $1,000, so you can adjust the level of risk to your own resources. A good solution is having $1,000 to divide the capital into 5 smaller parts and buy challenges for $200 each time getting used to trading in a prop trading firm and polishing your strategy. I will now present you with a model of how a prop trading firm operates. Assume for the purposes of this video that you pay an initial amount of $140. With such an investment in the challenge, you will eventually be aiming to obtain a funded account with $20,000 capital. You usually have to go through 2 phases to get such an account. Phase 1, challenge, and Phase 2, verification. The first phase is much more demanding. In the first phase, you have to make a profit of 10%. At the same time, your overall drawdown cannot exceed 10% and daily 5%. If you meet the above conditions, you move on to the next phase. In the second phase, called the verification phase, you aim to prove that the first phase was not by chance and confirm your skills. The conditions in this phase are less restrictive than in the first phase. Usually, the profit you have to make is half as much. So in this case, it would only be 5%. Drawdown conditions remain the same. After passing this phase, you sign a contract with the company and receive a certificate of completion of the challenge. After completing both phases, you will receive a funded account with $20,000, where you will be able to withdraw realized profits, most commonly in an 80-20 split, where you receive 80% and the prop trading company keeps 20% for itself. Drawdown conditions in this phase also remain unchanged. If you lose 10% of the account, the prop trading company will break the contract with you. Remember, the above citation is just an example, so challenges on company websites may vary. Always check the challenge conditions in a particular prop trading company yourself, or use our detailed reports available at fxprop.com. CFD brokers have been on the market for decades and have a strong position, whereas prop trading companies have only been around for a few years. So, you may be asking yourself, are prop trading companies even legal? The answer is yes, they are. They operate entirely legally. These companies are regulated by the appropriate financial bodies and operate in accordance with the financial regulations in their country. This means that the rules and procedures they apply meet specific standards, ensuring traders that their investments are safe. Furthermore, prop trading firms are transparent in their operations. They publish the regulations which precisely explain the rules of trading, profit division, and potential risks. This gives traders a clear picture of what they can expect before deciding to join them. All of this translates into a trading environment that is not only legal, but also safe and open to traders. One can trade with full confidence, knowing that the practices of the prop trading firm are fully compliant with the law. As FX Prop, we continually monitor the operations of companies that have received our certification to give all those who want to take advantage of their offers additional assurance about the transparency of their actions.